All right, traders, this is Christian from Tribeca Trade Group, and this is your end of day recap for Monday, October 29th. And wow, what a volatile day. So I'll go over today's price action. But, bottom line is, uh, we're kind of behaving very much like a bear market. We've had what three big bounce days? I would say in the last 2 weeks. Well, going into this week would be the third week, but we had two Tuesdays that were big bounce days, and then they just get faded and kind of swallowed up. And that's what basically was what today was. All the averages opened up about up 1% on the day. The IBM Red Hat deal helped give tech a bounce pre-market, but any type of strength is getting faded. So this I've traded through several bear markets, and it's kind of how it is. The market just cannot sustain a bid, and growth, especially growth names, get sold. So. This is the commentary that I'm giving to members in the middle of the day. I'm going to start doing this, every day. We kind of switched the format at Tribeca Trade Group. We're doing a kind of a midday session, and what was happening was the midday things were just becoming too volatile, and as things were occurring midday, and which we still are getting change of directions midday, like we got on basically on Friday. I think it's just more advantageous for me to kind of put out a couple quick bullets about what's going on for the day, what the major themes are, and then you can kind of set up and think about those and position accordingly. So that's what's going on. This is also what I put out in the weekend video. Just sorry, not the weekend video, but the weekend newsletter, which I was away for most of the weekend. But I returned, and sometimes it really helps to kind of get away from the screens for a couple days, because I go through charts all day, every night. I screen as well, and sometimes just taking a quick breath away from the headlines and letting a little bit of digestion in your own mind helps a little bit. But when I came back, I went through some charts, and I said I just wish that I saw some better setups. But it is what it is. You can't force trades here, and you can't overtrade. You don't want to overtrade when we're going through this. Preservation of capital is paramount. If you can find something that really looks like a good setup, like we found in Walmart about a week and a half ago, then so be it. But if it doesn't look right, you can take small shots at things, but it's really, you want to preserve capital, and this is basically what I've been putting on on my what's in gray is basically a carryover from the weekend before, but caution right now, and it's just there's too many things that are breaking down. And when this has been ongoing now, this is not new. This is not just today, just because the FANG stocks got hit. But I mean, the positioning is telling us the exact same thing. I mean, every week I'm seeing money going into short-term bond funds. So even in the bond world, which, believe it or not, over the last 30 days has seen more outflows than the equity world, but there's just a repricing. There's money that's going into short term. If you look to see what these are, which I'm not going to take the time to do it now because I want to move on to some other things, but if you look to see what SHV are, Mint, Shy, and I went over this. I was actually on Bloomberg last Wednesday. Unfortunately, the segment got skipped because of the headlines that were going on in New York and Columbus Square. But it was taped, and I think it was on this week. They replay those segments on the weekend, but you can find it on the ETF IQ on Bloomberg. Just a little bit more in detail about what I talked about. But I was talking about money going into consumer staples and short-term bond ETFs. So these are not representative of risk on. And you're going to get chopped up, as we saw this move. From the beginning of the day to the end of the day, just all over the place. So I'll start to go over some charts, but that's really kind of what our services are, is just to kind of to help. It's not so much to say, when there's good setups, I'll provide the good setups and the chart setups, but you don't want to be looking at that many great chart setups right now. You want to just get out of the way. And so I try to do that as much as possible, and that's why we have the weekend newsletter and doing things like sending notes out midday so that you can kind of get a feel for whether you should be really taking a lot of risk on or being a little bit more conservative. So again, all of this is for information purposes only. I basically just talk about what I'm doing and what I'm seeing, but I've been doing this for a long time, and picking up on macro trends and trends within sectors. Really just looking at the sectors the last couple of weeks has helped me a lot. Find out, what kind of tape. I mean, again, if you look at the leaders of the day, regional banks, I'll talk about them in a second, were the best performers. But this is what you had for the majority of the last 2 weeks is utilities, consumer staples. I call them, what did I call them last week? The three defensive amigos: the utilities, the REITs, and the consumer staples. They're the ones that are leading right now. So I'll go over a couple of these charts. I took two more targets today in my Walmart swing trade because I just feel at some point these defensives are gonna run out of steam. Now I think Walmart's a little bit different. This is the second time I've seen one of these ugly looking bars. We saw this in XLP last week, which got me out of a quick. I think I held XLP for about one day, the consumer staples ETF. But this is this is not a place where this is where you want to be taking profits, in my opinion, when you see a candle like this after a swing up. So if that's all I get out of Walmart, that's fine. I was able to take some of this trade off, December trade off at 570. I got into it at 330, so getting close to a double. At this point in a trade that's just been basically grinding higher. So let me just switch over to consumer staples because, as I mentioned, there was a very toppy looking candle which kind of scared me out of that trade last week. But if you go across the group, this is a little bit. I'll bring up Hormel Foods. This is spam. Right, so spam closed up 3.7% today. So, you kind of have to think about things as this has got strength right now. How long will it have strength? I don't know, but this is what's been going on a lot of these defensive areas. And I've been looking for trades in this group because they are moving up. So do I want to be in, I mean, how many millennials do you know are going to eat spam? I don't think that's really going to be the case. I don't, but it's very representative of what we're seeing right now. So, besides Walmart, there was some other trades that some other names that looked pretty good today, but they gave back those gains. Target, and don't worry, I'm going to go over the major indices in a second, but let me just go through a couple themes. But Target was not able to close on the highs. I started a new trade. I kind of got out of Walmart and started moving over into Costco call spreads. I like how the chart is kind of forming a double bottom. So again, I'm just looking for a move basically back to where it was. And I set up I think a $10 wide call spread. What did I do here for this one? 227.5, 237.5. So I am actually looking for this to go a little bit higher than that in the next couple of months. They don't report for a while, so that's good. A few other names that I think looked interesting as well. Well, let's talk about the indices first. So this is what we have for the candle for today. It almost looks another crazy candle like this. It did. I mean, I'm very careful about how to phrase these things because I don't know if this is necessarily what we're going to have on our hands, but we are starting to see. I mean, this kind of looked like a seller's capitulation. I mean, we moved on this 1 5-minute bar, 2621. Basically almost down to 2600. So, but about 15, 16 handles. We moved in 5 minutes and then bounced right back. So. How is this starting to look? And again, you can see where we started on the day. We paused at paused at the top of value and then kept going. So now, and this was another reason why I said that I don't really like these setups because first of all, we're under the 200-day moving average in SPY, Qs, IWM. This is not a place to really set up camp. This is a place to be cautious. But if you look at S&P, we're getting closer and closer to support. That's 20 right around 25.13. So that's another 100 handles down. The way that we've been moving, it is definitely possible, and that's where we've gotten support previously. So that is not out of the realm of possibilities. If you go over to IWM, because IWM was trailing further and started the decline before SPY did, but this is getting very close. I actually sold some premium today because that's a trade that I'm going to be looking at more and more as we get further down into support. You just have to be a little bit patient. So I did a trade today in small caps using the Russell indices to sell a little bit of premium. I'm not going to go over that here because that's you have to pay for the trades, obviously, and this is a free video. But we're close, right? I mean, it's pretty close to support. So I pulled the trigger with the ability to add to that trade. That trade does not expire for a while, so I can make adjustments and so forth if we end up going a little bit lower. So that's what that looks like. And then Qs were the big turnover today. This was down. The Qs were down 2%. And again, it's not. I don't think we're hitting support yet either. And we don't have to go down here in a straight line. But here's where I see support: 154. That's another 7 handles down. So again, we don't definitely have to go down there. I just don't see a lot of support on the daily chart. And I see this stuff down here. So I think you could really draw some abstract charts to say where you see support, but there's an unwinding right now. The issue with the FANG stocks is they're over-owned, and even now, I mean, I think that people have been hiding out in these things for a long time. The other group that got hit today was the defense stocks. Again, specifically Boeing. Boeing does have support in here, but it broke the 200-day moving average. Notice how tight the price got to the 200-day moving average. We've been seeing that in chart after chart. And it does kind of feel like some of this, if you remember back here, all the volume in this ITA that happened post-election, post-presidential election, all this volume and all these, there was a ton of inflows into defense stocks. Well, it looks like that's coming undone pretty quickly. Again, this is the ITA aerospace and defense. I think Boeing is the biggest weight in this thing. Getting pretty oversold. I mean, a lot of these names that are in this, like Raytheon reported some good numbers. They're just, they're overowned, and these are places where these were election trades, and possibly with the November election coming up, there's some doubt whether or not the Republicans are going to hold to both the houses. So some of these election trades are coming undone right now. So that's a little bit about of what I see in some of the groups that are falling. A couple of the other things that I pointed out in the weekend newsletter that I thought were interesting is XLF. Now I was showing the weekly chart, and this is something that I saw. This is the daily chart. We took out a version point of control, which I think is important when you take these levels out. And then if you switch over to the weekly chart, this one had hit support. So we bounced a bit on support, and that's exactly what I was saying in the weekend newsletter. Now, I don't think we got that in industrials, which I also thought, I said there are some sectors that are oversold into support. So XLF got the bounce. The regional banks actually held up all day today. KRE, a little bit different picture, is now is inside value, went all the way through the value area and inside, was up 2%, and that was your star of the day. So besides the 3 defensive amigos that I've been talking about, the other one, and I'm kind of giving away a lot of my analysis here, but that's okay, is XLV, which I did not get a chance to put a trade on. And, I'm still trading, even though there's some things that I'm interested in. It's like playing a very, very selective, poker hand. You're only going to play the hand if I've got something that I know or very close to knowing that I can win with. But the healthcare ETF, which I think is also defensive, is holding. You got 3 long wick. So it looks like it is trying to find some support in here, right at the 200-day moving average. So again, as long as you're disciplined, I say this a lot, you could try this trade and then just make sure you take it off if it doesn't hold. Because I saw some things that were looking interesting today that against the 200-day moving average that did not hold. Salesforce. I've actually put this out on my watch list this morning to members, and it did not hold. It had difficulty. I was watching it this morning, and I actually set an alert right at the top of value for the day. This was the first hour, and it could not hold it, and we drifted into value, and then we saw some puts go up in Salesforce. But what a violent move! What a violent sell-off in a group that. There was a very big deal that gave some pin action early to these names. Same thing with Hubs. This is another software name. This did not hold its 200-day moving average either. So, oh, actually, it did. It did. So, lives for another day. But when I looked at this around 3:30, it was going through. So, you know, um, you want to see some confirmation too. Like this is not confirmation. So that's it. So for today's option activity, it was very light, as I mentioned. Uh, where's my Where's my little letter? Option activity on the call side has been very quiet. There was a couple other trades. I know there was a couple other trades to mention. Comcast, again, something a little bit that you probably have off your radar. But Comcast is above the 200-day moving average and saw some positioning, and that earnings is now behind it. So, what I try to do is try to be as objective as possible. I've tried to really unwind as many growth names as possible in my portfolio. I still have a couple things on. I've got IGV on, which is now broken. I wanted to see if this was going to reclaim the 200-day moving average. It certainly did not today. It touched it and failed. So I think I'm going to have to take this trade off at this point. It actually did hit a stop today. I just did not get a chance to unwind it. But for the most part, I've really been taking off and have been pretty spared with this growth area. But I see more and more traders. They're continuing to try to gravitate back to growth. And I see, in my opinion, just forcing trades just because you're familiar with the name. For me, I will look at things as objective as possible and go into areas where I think that they're running up. Now, like I said, I'm not going to go into Hormel and live there in a trade, but another group that looked pretty good today, again, gave back a lot of the gains, was some of these discount retailers, Ross stores. Really nice MACD crossover. This is a name to watch tomorrow. I could not pull the trigger. I almost did and just decided not to. Again, I just don't want to put on too many trades unless to me they're jumping off the page at me saying buy, 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 and I just do not see that right now. TJX is another one. So you can watch these tomorrow. Like I said, I went into Costco, so I don't want to also have 3 or 4 names in these groups. I see they're going over the VIX on CNBC. Just taking a look at this, I thought we saw a pretty good signal on Friday where the VIX closed lower and not higher, with the market going down, which meaning the S&P did not confirm the VIX on Friday, but it's still kind of hanging out here, and another did finish up on the day. Please, please, please do not look at this VXX. Also, yeah, I see retail traders quote VXX all the time. I really don't understand why they're doing it. Here's a chart and I'll show you why. I was looking at some relationships before. IWM is starting to outperform the S&P, but here's a chart of the VIX, and I just